This is Caleb Barney with Russell Real Estate, and today I wanted to go over some data from the National Association of Realtors, going over mortgage rates and approval rates within the past 5 years. Because I think that we can use this data basically to look forward into seeing the likelihood or the inclination of certain homeowners that are likely or more prone to selling their house in the future. Now, I'm of the belief that people will always buy and sell houses, and it's not just solely dependent on interest rates for what they're paying for their mortgage, their monthly mortgage payment. So people, they'll move whether there's a death in the family, whether they're starting a new family, and maybe they're having a new son or daughter, or they're just outgrowing their space. Maybe there's a divorce, maybe there's a marriage, so people are forming households. There's so many different reasons, a job change, relocation, stuff like that. And then some people, they're just, they're moving up in their careers, they're making more money, and just as a status symbol or just as, keeping up with the Joneses. And I'm not saying that in a negative light, but, they call them starter homes for a reason. And sometimes you just want to trade up. And then just as likely is, the baby boomers who maybe have a colonial home that, maybe they raised a family there and now they're not using the vast majority of their house, or they're not, able to go upstairs as easily or downstairs to the laundry room as easily, and they want to downsize. So that's why I think that there's always more to it than just mortgage rates. But for the people who are going to be more price sensitive, this is some important information to at least take a look at and consider. So this article, it's just titled "Mortgage Rates and Approval Rates in the Last 5 Years." It came out yesterday, which is October 25th. I'm recording this on the morning of October 26th. And basically what we're looking at here is between 2018 and 2022, most applicants. So if you're looking at just a per price range, and they bucketed them between every half of percent, most applicants between that time frame actually received a mortgage rate below 3%. So 5.5 million people had an interest rate below 3%. Yet another, 5.173 between 3 and 3.5%, and almost another 5 million between 3.5 and 4%. So, I mean, historically low interest rates. I've talked with many loan officers. I've listened to so many different economists that have basically said, hey, we're never going to see it interest rates below 3% again. Very unlikely that we'll see it below 4%, at least for a very, very long time. So don't hold your breath for that. As of right now, we're in like the 7.9% range, 7.875 for the national average for the 30-year fixed rate loan. Obviously, that depends on how much you can put down, what your credit score is, your DTI, debt to income ratio, assets, liabilities, everything like that. They take into account a variety of factors. But if you're looking at 7.9%, honestly, if we can get between like closer to that 6.5% range and just stay there for duration, I think that will help with the housing supply issue that we've had for people just basically being afraid to list their house for sale because they're not sure where they're going to go. They don't want to basically, increase their mortgage payment, because if they're trying to get more of a house, but it's a higher interest rate, house prices haven't come down, so their monthly payment's going to go up. Or even if they're trying to downsize and they're getting less of a house, but they're increasing their interest rate by 2 percentage points or more sometimes, and then they're paying, the same or a higher monthly mortgage payment there too. And at that point, they're probably just saying, okay, well, screw it. Even though we're not using a third of this house, I'd rather just keep my monthly mortgage payment what it is now and not have to worry about moving, and all the stresses that come with that then. So this is the distribution of application by rates from 2018 to 2022. Again, a historically low time period. If you look at just 2022, which again, right now it's the end of October in 2023, but all of the home data comes out delayed. But if you remember, in January of 2022, the national average for the 30-year fixed rate loan was about 3.1%. And then it spiked, it went up every single month as the Federal Reserve increased their Fed funds rates. The 10-year Treasury went up, and then we basically saw interest rates more than double over the course of the year. They went from 3.1% in January. They topped out basically about this time last year, late October, early November, at 7.375. And then it kind of leveled off a little bit as we headed into 2023. And, we were hovering around 7% for a while. And then, between, the ongoing war between Ukraine and Russia, then there was further war possibilities, and, well, not just possibilities, but what's going on right now between Israel and Palestine. We have oil issues, we have the government shutdown issues. There's a lot of uncertainty. People have been talking about recessions for a long time, even though the employment sector has actually been very strong. But basically, we have actually seen our interest rate go from about 7 to, like I said, we actually topped 8% a few weeks ago, and now we're back down into like the 7.9-ish range. But when you're looking here, you could actually see the distribution of everything in 2022. And when you see above 10%, by the way, the 21,000 loan applicants who have an interest rate above 10%, reasons for that, they're typically using hard money, private money, stuff like that, where it's going to be a different loan product, or it's going to be a different lender, again, whether it's a hard money lender or a private money lender. So that's where you're seeing the above 10% there. As far as mortgage approval rates, we have, again, our historical average over the past 5 years. I live in the Cleveland area in Northeast Ohio, so I like looking at Ohio. The mortgage approval rate for the past 5 years was about 61.5%, and then the average interest rate was about 4.3%. They do have the 2022 data separated as well, so we're at 60.26%, so it went down a little there, as you would expect, because interest rates went up to an average interest rate of 5.11%, and basically, as you increase your interest rate, and if home prices aren't falling, then fewer buyers are going to be eligible or qualified buyers. So that's why there's fewer approvals, or as a percentage of people who are applying for a loan, less people are getting approved for it. So again, this information, it doesn't tell us anything specifically. I just wanted to go over it and kind of keep in mind, okay, 2022, these average interest rates are 5.11%. We're still seeing, as far as the vast majority, if you're looking in the buckets or the groups here, the highest amount was actually between 5.5% and 6%. And when we're looking forward to, 2024, 2025, that's when people ideally will be able to refinance and interest rates will be coming back down. And when they do, these the groups between 4.5 to 6.5, 7%, those people are not going to be nearly as tied to keeping their interest rates where they're at, and they're going to be much more likely to move. So if you're, a real estate professional, whether a loan officer, a real estate agent, in the title business, honestly, it's more about, uh, to be completely frank, surviving over the next year. Um, so survive in 24 and thrive in 25. Obviously, you always want to pick up more and more business. And, I am a real estate agent here in Northeast Ohio. So if you're looking to buy, sell, or invest, feel free to reach out. I'm very numbers driven, as you can see. But other than that, for all of my fellow real estate professionals, just hang on, make sure you're doing the right things, and yeah, hopefully you have a successful 2024.